Top 20 trending indicators. The ones traders hyped the most over the last few months. All tested for you, so you don't waste time hunting for the best ones yourself. We pulled the code on every one of them, ran each through our scoring system, and stacked them lowest to highest, so you can see exactly which ones earn a spot on your chart and which ones are all packaging. Let's get into it. Next candle predictor. Created by Predictor Futures, this Pine script indicator attempts next candle direction forecasting through weighted confluence scoring of 7 technical indicators. The scoring engine assigns percentage weights across trend alignment, MACD momentum, volume delta, RSI positioning, stochastic crossovers, ADX strength, and volume ratio. Each indicator receives scores from 0 to 100 based on condition strength, which multiply by weight factors to produce composite long and short scores, summing to 100%. The custom supertrend calculates upper and lower bands using ATR multiplication, flipping direction when price crosses the opposite band. Volume delta splits each candle's volume into buying and selling components based on close position within the range, then compares against its 10-period EMA. Long signals require positive delta, and short signals need negative delta. The 8-point confluence system requires minimum alignment across trend state, EMA positioning, stochastic cross, volume threshold, ADX exceeding 25, RSI above, below 50, and delta direction. Users configure minimum required points, defaulting to 5 of 8. Volatility regime detection uses ATR percentile ranking to apply score multipliers. High volatility reduces scores by 15%, while low volatility boosts them by 15%. The projection visualization draws future candles sized proportionally to long and short scores, with height scaled by current ATR and volatility multiplier. Real trading centers on waiting for perfect time signals, combining high scores with full confluence and delta confirmation. It packages familiar indicators into an organized framework with thoughtful confluence requirements, and the V4 delta fix addresses directional conflicts. However, the fundamental methodology remains indicator stacking without genuine predictive innovation. Past price data combinations cannot reliably forecast future candles regardless of weighting sophistication. The value exists in organized multi-time frame indicator monitoring and confluence discipline rather than actual next candle prediction capability. Sniper entry and exit with stop loss and take profit, created by Consob version 2.0, is a trend following and trade management indicator built around EMA crossovers as its primary signal trigger. It takes a practical toolkit approach, combining widely used indicators into a scoring system and trade setup engine that attempts to consolidate the decision-making process into a single overlay. The core signal is straightforward. When EMA 9 crosses above EMA 21, a long signal fires. When it crosses below, a short triggers. From that point, the indicator calculates stop loss and 5 take profit levels using ATR 14 as the risk unit. The stop is placed 1.5 times ATR from entry by default, and targets are stacked at 1 through 5 times that same risk distance, updating labels in real time and marking hit targets visually. Layered on top is a dual scoring system built from 7 conditions each for bullish and bearish bias, including price position relative to VWAP, RSI, on both the current time frame and a hard-coded 5-minute time frame, MACD line direction, EMA alignment, ADX strength, and volume relative to its 20-period average. Results are expressed as a percentage and simplified into 4 bias states displayed in a left-side dashboard, alongside 16 rows of live market data. For traders who want a single place to read conditions without jumping between panels, that dashboard is genuinely useful. In trending environments with clear momentum, the confluence stack behind each signal is reasonable. The ATR-based target ladder also adapts to volatility automatically, which prevents the problem of fixed values becoming irrelevant as conditions shift. However, EMA crossovers are inherently lagging, and entering at the crossover point often means the favorable portion of the move has already passed. There is no dynamic stop trail or break-even logic, so position management beyond identifying the target levels is entirely manual. The packaging is clean and the dashboard is informative, but EMA crossover signals are among the most lagging entry methods available, which limits edge in competitive markets. The lack of dynamic stop management and the inflexible 5-minute RSI input are practical gaps that more experienced traders will feel immediately. The RSI entry engine, created by TradeWusamet, is a smoothed RSI system built around extreme zone reclaim signals, trade projection boxes, and a compact status panel. The RSI calculation itself is more flexible than a standard implementation. The raw RSI can be smoothed with an EMA, SMA, or RMA before plotting, and a separate signal line is derived from that smoothed value using the same three options independently. That combination gives meaningful control over how reactive or smooth the final line feels without needing a separate indicator. The overbought, oversold, extreme high, and extreme low levels are all user-defined, separating the signal trigger zone from the general zone coloring. Signal logic is straightforward. A long fires when the smoothed RSI crosses back up through the extreme low level, and a short fires when it crosses back down through the extreme high. Trade boxes are drawn on the price chart at signal time with a configurable stop-loss mode using the signal candle, ATR, or a percentage distance, and a fixed risk to reward target. Active boxes extend bar by bar until TP or SL is hit, at which point a label marks the result. Same bar TP and SL conflicts are handled with a user-selectable priority. The status panel shows live RSI and signal values, a zone status label, a momentum direction derived from the 1-bar RSI delta, and whether RSI is above or below its signal line. It is readable and covers the essential state at a glance. This needs confirmation before you trade it. Without a trend filter, it fires in both directions, regardless of market conditions, so pairing it with a higher time frame EMA or a trend strength read like ADX will immediately improve signal quality by keeping you on the right side of the prevailing move. The default risk to reward of 5 is aggressive for a pure RSI reclaim signal and will produce a low hit rate on most instruments without additional confirmation. The smoothing flexibility and reclaim-based signal logic are sensible design choices that lift it above a basic RSI wrapper. The lack of any directional filter and the overly optimistic default risk-to-reward ratio limit its practical readiness as a standalone system. Mean deviation loop. Created by LyraRS, this indicator applies mean absolute deviation, or MAD, calculations through two distinct methodologies: a Bollinger Band-style channel and a directional scoring loop. MAD measures volatility by calculating the average distance between price and a moving average, giving equal weight to all deviations regardless of size. Users select which signal mode to follow or combine both through a hybrid scoring system. The Bollinger Band mode calculates MAD by measuring average absolute distance between price and a selected moving average over the look-back period defaulting to 25. The system then creates asymmetric bands using separate multipliers for upper at 1.4 times and lower at 1.0 times zones, triggering signals when price crosses these boundaries. The for-loop mode operates through a different mechanism. It weights the source price by MAD values, calculates a moving average of this weighted price, then runs a directional scoring loop. The combined signal mode averages the binary states from both Bollinger Band and for-loop methods. This normalized score crosses user-defined thresholds to determine final trade signals. A statistics table displays real-time signal states for all three modes simultaneously, allowing comparison of their current readings. Customization spans moving average type selection with 16 options from SMA to T3, separate length and multiplier controls for both calculation modes, independent threshold settings. The for-loop scoring replicates trend strength measurement available through simpler oscillators. All those separate thresholds and parameters create optimization risk, where you'll find settings that fit history perfectly but fail in live trading. SMC Target Liquidity, V.35. Created by WhatTrader, this Pine script indicator tracks smart money concepts' liquidity levels by marking pivot highs and lows with session-colored lines, then classifying their violation as sweeps, fakeouts, or market structure shifts. The pivot detection identifies swing highs and lows using configurable lookback, then validates each pivot by checking whether price breached the level during confirmation. Only pivots remaining intact through verification generate horizontal lines, filtering weak levels that broke immediately. Session classification color codes each line based on formation timing. This temporal context helps identify which session's liquidity pools remain unswept. The three-state classification evaluates price interaction. X marks sweeps where wicks touch but close back opposite side. SFP identifies swing failures, where close crosses with previous close on opposite side. MSS denotes structure shifts when close breaks through and continues across consecutive candles. Array management limits active lines to user-defined maximum, automatically removing oldest levels when new pivots emerge. The core methodology assumes institutional algorithms target obvious liquidity pools at swing points, oversimplifying actual market microstructure. The three-state classification adds structure, but doesn't validate whether these patterns precede profitable trades. It executes session-based liquidity tracking competently with useful manual label controls and clean multi-state classification. The session color coding provides genuine temporal insight for Forex traders. However, it remains fundamentally a pivot marking tool with SMC terminology layered on top. The value exists in organized level tracking and visual session awareness, rather than confirming actual smart money activity. If you want a complete trading system with full customization so you don't have to jump between tools, Quantum Ribbon Pro was built for that. Link in the description. Let's continue. Analog Matcher, created by Gaines Algo, is a pattern recognition indicator that searches historical price action for the closest structural match to the current moment and projects what happened next directly onto the right side of the chart. The concept is pattern analog forecasting, a technique borrowed from meteorology and quantitative finance, applied here to raw price slope using linear regression. The matching engine runs a full linear regression on price against time across a user-defined look-back period, extracting the slope and R-squared value for each historical window. It then compares the current regression slope against every candidate in that history and finds the closest match within a slope tolerance threshold. In dual mode, it separates those matches into the best bullish and bearish outcomes, drawing both projections simultaneously so you can see what the chart did in each case. In single mode, it returns only the single closest match regardless of direction. The projected path is scaled to the current price level and rendered as actual candlestick boxes and wicks, which gives an immediate visual read on what the analog period looked like structurally. A small table shows the direction, bar index, timestamp, and a confidence score for each match. That confidence score combines slope similarity with R-squared alignment between the historical and current regression, producing a percentage that roughly describes how closely the two periods agree both in trend angle and linearity. This is not a standalone tool. It has no entry signals or risk management, so it works best alongside a primary system as a context layer. Use it to ask whether the current slope environment has historically resolved in your favor before committing to a trade your main indicator is already suggesting. The limitation is fundamental to the approach. Linear regression slope is a fairly coarse fingerprint for a price pattern. Two periods with identical slopes can look completely different structurally, and the look-back is capped at 500 bars by default, which on higher timeframes covers very little history. Performance may also degrade on the last bar recalculation loop at scale. The analog projection idea is genuinely original in the retail indicator space, and the dual mode rendering is visually clean and immediately readable. The slope-only matching criteria is too shallow to produce reliable analogs consistently, and without deeper pattern similarity measures the confidence score can be misleading. Neural Probability Channel. Created through a collaboration between Harmony Algo and AlgoPoint, this indicator applies kernel regression mathematics to price analysis. At its core sits a rational quadratic kernel function that assigns weights to historical price points based on their proximity to the current bar, creating what the authors call a neural baseline, essentially a mathematically smoothed fair value estimate. The kernel engine processes price data through three key parameters: look-back window with a default of 24 bars, bandwidth for smoothness control defaulting to 8.0, and regression alpha set at 2.0 that determines whether the model focuses locally or considers broader context. Volatility measurement combines mean absolute deviation with ATR, producing hybrid channel bands at inner 1.5 times multiplier and outer 2.5 times multiplier distances from the baseline. The mean reversion logic triggers long signals when price crosses above the lower outer band, and short signals when crossing below the upper outer band, essentially buying oversold conditions and selling overbought ones. Unlike traditional Bollinger Bands, which use standard deviation, this indicator's mathematical foundation lies in kernel density estimation, a machine learning technique for probability distribution modeling. Trading applications center on mean reversion strategies where extreme band touches signal potential reversals. The inner bands can serve as partial profit targets, while outer bands mark entry zones. Traders might combine this with trend confirmation, entering mean reversion trades only when the baseline slope aligns with higher time frame direction. The mathematical terminology sounds impressive, but the practical output is just another volatility channel with mean reversion signals. You're essentially getting Bollinger Bands with extra steps and fancier language. Real trading performance would likely mirror traditional methods without providing meaningful edge over simpler alternatives. ADX volatility waves. Created by BOS Waves, this Pine script indicator fuses ADX trend strength measurements with Bollinger Bands to generate dynamic volatility zones that adapt based on directional momentum. It positions gradient-colored overbought and oversold regions outside traditional Bollinger Bands, with zone width responding to ADX values. The core mechanism calculates standard Bollinger Bands, then applies an ADX-based adjustment factor to the deviation component. When ADX rises, the multiplier expands bands to account for increased volatility during strong trends. Zone positioning starts at user-defined offset distance beyond smoothed Bollinger Bands, with width scaling as a multiple of the smoothed range. The gradient visualization divides each zone into 10 layers, with color intensity progressing from light to dark as price penetrates deeper. Signal generation triggers when price enters extreme zones after spending time in neutral territory. The cooldown parameter prevents signal spam by blocking new alerts until minimum bars elapse. During strong trends where ADX exceeds threshold, expanded zones acknowledge trending markets naturally push further into statistical extremes. When ADX falls below weak threshold, compressed zones reflect lower conviction environments where mean reversion becomes more reliable. Strategy development could incorporate squeeze detection that fires when Bollinger width falls below its 50-period average, signaling potential breakout setups. The smoothing length becomes critical for timeframe adaptation. Higher values create stable zones for position trading. Lower settings generate responsive boundaries for intraday scalping. It effectively combines two established indicators with thoughtful zone positioning logic and ADX responsive volatility adjustment. The gradient visualization adds useful depth perception for extreme conditions, while smoothing and cooldown parameters prevent common overbought/oversold signal problems. However, the fundamental approach remains derivative, and execution here doesn't introduce breakthrough methodology beyond aesthetic refinement. The edge comes from parameter tuning, rather than novel analytical insight. Loop Pro, created by the Real Drip to Rip, is a trend-following signal indicator built around a range filter as its core detection engine, layered with multiple confluence checks, multi-time frame alignment, and an optional pivot-level system. The name stands for finally long or obviously panicking, which at least tells you something about the intended audience. The range filter calculates an ATR-based threshold, scaled by a sensitivity input, then trails price by that amount in whichever direction it is moving. When the filter changes direction, a raw signal fires. That signal then passes through 3 separate gates before reaching the chart: an EMA alignment check, an ADX filter requiring trend strength above a set threshold, and a choppiness index filter that blocks signals when the market is range-bound. A cooldown period prevents repeated signals within a set number of bars. Signals that fail any gate are shown as small crosses rather than full labels, giving visibility into what is being filtered out. The signal strength score runs from 0 to 14, combining multi-time frame range filter alignment across 5 time frames, EMA and momentum scoring. Sensitivity cross-checks at fixed values of 3, 5, 12, and 16, volatility rank, and the higher time frame bias. Scores of 11 and above are flagged as high quality, with dedicated alert conditions for those setups specifically. Pivot levels are a separate but integrated feature, supporting classic, Fibonacci, and Camarilla formulas across a user-defined time frame. Levels change color dynamically when price breaks through them, which adds practical reference without requiring a separate indicator. In real trading use, the multi-gate filtering approach is the strongest part of the indicator. Blocking signals during low ADX and high choppiness conditions meaningfully reduces whipsaw entries that a raw range filter would otherwise produce. The layered filtering system is well thought out, and the signal strength scoring gives traders a basis for selectivity rather than taking every signal blindly. The pivot integration is a genuine bonus. The ML references in the tooltips and comments are unverified marketing language rather than documented methodology, which is worth noting before placing weight on those specific claims. Swing Profile, created by Big Beluga, is a volume distribution indicator that maps trading activity across each swing leg of price movement. Rather than applying a static volume profile to a fixed time window, it attaches the profile directly to each detected swing, giving traders a view of where volume concentrated during that specific directional move. The detection logic uses highest high and lowest low over a user-defined swing length to identify pivot points, then monitors for direction changes to finalize each leg. When a swing completes, the indicator divides the price range of that leg into bins sized using half of ATR 200, accumulates volume per bin across every bar within that swing, and renders the result as a horizontal profile anchored to the swing. The point of control, the bin with the highest volume, is marked with a dedicated line. Buy and sell volume are tracked separately per bin and accessible via tooltip on each swing label, showing total volume, buy volume, sell volume, and delta as a percentage. Two display modes are available. The standard profile view renders the histogram as a polyline outline, with gradient-filled boxes. The heat map mode fills boxes horizontally across the full swing width, showing volume intensity as a color gradient rather than bar width. Both modes update in real time as the current swing develops, rebuilding on each bar until a new pivot confirms the direction change. In practical use, the point of control levels from completed swings act as reference zones on future price revisits, similar to how session volume profiles are used, but scoped to swing structure rather than time. Traders can identify where the market did the most work during a rally or decline, and use those levels as potential reaction areas if price returns. The delta percentage adds a directional dimension, distinguishing between swings where buyers dominated and those where sellers were in control despite similar price ranges. Customization covers swing length, color settings for up and down moves, zigzag line style, point of control color and width, profile or heat map toggle, and label size. The swing-scoped volume profile is a genuinely useful concept that most free tools do not offer, and the real-time update behavior adds meaningful live trading utility. The bin sizing tied to ATR 200 is not adjustable, which can produce poorly proportioned profiles on certain instruments or timeframes, and the absence of alerts limits its use as an active signal tool. Directional Logistic Oscillator, created by Gein's Algo, is a momentum and directional strength indicator that applies logistic probability transformation to the standard DMI components, converting raw directional index values into a bounded oscillator with a more statistically grounded output than a typical ADX-based tool. The core calculation takes the plus DI, minus DI, and ADX values and runs each through a logistic function that measures how far each reading sits from its long-term average, scaled by a slope factor before being compressed into a 0 to 1 probability range. The result is smoothed with an EMA and displayed as a column histogram, with stronger and weaker shades of the bull and bear colors distinguishing momentum intensity from direction alone. Two signal types are available. Reversion signals fire when the smooth cycle line changes direction, identifying local turning points in the oscillator. Mean reversion signals trigger when the oscillator crosses back from percentile-based extreme zones, using the 10th and 90th percentiles of the SMA line and the 5th and 95th percentiles of the EMA line as dynamic thresholds. Both signal types plot directly on the price chart as small arrows and have dedicated alert conditions, along with zero-line cross alerts for basic directional shifts. In practice, this works best as a trend filter or confirmation tool, alongside a price-based entry method. The percentile thresholds adapt to recent oscillator behavior, rather than using fixed levels, which makes the extreme zone signals more relevant across different market conditions and instruments. The intrabar update toggle is a practical addition for traders who want real-time responsiveness on the current bar, rather than waiting for confirmation. Customization is solid, covering DI length, mean lookback, slope steepness, smoothing lengths, scale sensitivity, signal toggles, and colors. The logistic transformation applied to DMI components is a genuinely different approach that adds statistical context most directional oscillators lack. The dual signal system covers both trend continuation and mean reversion scenarios, which broadens its practical application. The 360-bar default mean lookback is a significant lag factor on lower timeframes and worth adjusting before drawing conclusions from the output. HTF reversal, divergences created by LuxAlgo, is a separate pane RSI indicator that combines higher timeframe candlestick pattern detection with RSI divergence identification, overlaying the pattern visuals directly on the price chart while keeping the RSI and divergence lines in the indicator pane below. The RSI divergence logic uses pivot highs and lows with adjustable left and right lookback periods to find points where price makes a lower low, but RSI makes a higher low for bullish divergence, and the inverse for bearish. When confirmed, lines are drawn on both the price chart and the RSI pane connecting the relevant pivot points, with labels marking each signal. The pivot-based approach means signals are only confirmed after the right lookback bars have elapsed, which introduces lag but avoids false positives from unconfirmed swings. The higher time frame pattern detection pulls the previous completed candle from a user-defined time frame and checks for bullish or bearish engulfing patterns and pin bars, specifically hammers and shooting stars. When a pattern is detected, the indicator draws a visual representation of that candle on the price chart using boxes for the body and a line for the wick, anchored to the actual time of that higher time frame bar. This gives lower timeframe traders a clear visual marker of where a potential reversal signal formed on the larger time frame without switching charts. The PO3 feature, which stands for power of 3, projects the current in-progress higher time frame candle to the right of price as a live updating candle, showing the open, high, low, and current close, with connecting dashed lines to their origin bars. Volume delta for the current candle is displayed below it. This is the most distinctive feature of the indicator and genuinely useful for traders who want to track how the higher timeframe candle is developing in real time. The combination of higher timeframe pattern visualization and RSI divergence in a single tool is practical and well executed. The live PO3 candle projection is a standout feature that adds real analytical value. The divergence detection is standard pivot-based logic with no additional confluence filter, so signal quality varies considerably with market conditions. Machine Learning Supertrend is a self-tuning adaptive supertrend indicator built around a continuous background optimization engine that adjusts its own parameters in real time based on simulated trade performance. The foundation is a standard ATR-based supertrend, but the bandwidth and smoothing period adjust themselves over time rather than staying fixed. A background test matrix continuously simulates long and short positions, scores the results, and feeds those findings into an optimizer that proposes parameter changes, bar by bar. A master dial from 1 to 20 controls how aggressively the system adapts. On top of that, a regime grid builds a memory of which parameter adjustments worked well under specific market conditions. So when the market returns to a familiar state, the system draws on that history rather than starting from scratch. Signal generation sits separately from the adaptation engine. In reversal mode, a signal fires when the supertrend flips after a confirmed new high or low. In breakout mode, it fires when price pushes a new extreme in the direction of the current trend. RSI zone memory, volume surge filtering, minimum bar spacing, and a key levels filter based on ATR range all apply as optional gates. A risk guard system tracks session trade count, cumulative session loss, consecutive losses, and cool-down bars between entries. It can function as a standalone system given the depth of its built-in filtering, but adding a trend filter or key-level context is worth considering. The adaptation engine has no awareness of where price sits structurally, so signals can fire in technically valid conditions that are working directly against a major level or the broader trend direction. The practical limitation is verifiability. The adaptation engine is complex enough that its behavior is difficult to audit on a live chart, and the 5-bar simulated hold used for learning does not correspond to how any real trader would manage a position. The architecture is genuinely ambitious, and several components, particularly the regime grid and decay trace feedback, represent real engineering effort rather than cosmetic complexity. The gap between the internal simulation assumptions and real-world trade management is significant enough that the learned parameters should be treated as directional guidance rather than a reliable edge. Big order bubbles. IQ, created by Trading IQ, is a volume analysis indicator that identifies unusually large individual orders within each bar using lower timeframe data and renders them as sized, glowing bubbles directly on the price chart. The core engine pulls intrabar volume at a lower time frame, either auto-selected, 1 second, or 1 tick, and scans each sub-bar for orders that exceed a percentile threshold or a user-defined dollar amount. 2 identification modes control what qualifies. Turning Points filters candidates further by requiring Williams' percent range to be near an extreme, meaning it only highlights large orders that arrive at potential reversal zones rather than flagging every high-volume tick indiscriminately. Extreme volume mode skips that filter and marks any order above the threshold regardless of where price is in its range. Bubble size scales relative to the largest and smallest detected orders in the visible window, so the visual weight of each bubble reflects its significance within the current context, rather than an absolute value. A separate histogram in the sub-pane accumulates total big buy and big sell volume per bar, giving a net directional read at a glance. A live tick mode is also available for real-time order detection without historical look-back, though it requires dollar amount filtering and loses all history on reload. The order table lists the most recent large orders with side, size, price, and time elapsed, with row colors gradient scaled to order size. An additional symbol input lets you overlay big order detection from a correlated instrument, useful for reading futures alongside spot or a sector ETF alongside individual names. This is a confirmation and context tool rather than a signal generator. It does not tell you when to enter, but it can meaningfully support a decision you are already leaning toward. A large buy bubble appearing at a key support level, your primary system is watching adds weight to a long setup in a way that standard volume bars cannot. The main practical limitation is the lower timeframe data dependency. On higher timeframes, the auto-selected sub-timeframe may be too coarse to capture meaningful intrabar order flow, and 1 second or 1 tick data requires a higher TradingView plan tier. The Turning Points mode is a genuinely thoughtful design choice that separates this from a generic volume spike detector, and the bubble rendering is among the more visually polished implementations in this space. Usefulness scales heavily with plan tier and instrument type, limiting accessibility for traders without premium data access. Market Structure Break and Order Block Probability Toolkit, published by LuxAlgo, combines market structure break detection with a momentum filter and order block identification with a quality scoring system. It does not just mark zones mechanically, but attempts to weigh them by the conditions under which they formed. Market structure breaks are detected when price closes beyond the last confirmed pivot, high or low. The Momentum Z-score filter is what separates this from simpler implementations. The indicator calculates a rolling price change over 50 bars, derives the standard deviation of that change, and expresses the current bar's momentum as a Z-score. A break only registers if that Z-score exceeds a configurable threshold in the corresponding direction, defaulting to 0.5. This filters out weak, low-conviction breaks and focuses attention on those carrying genuine directional pressure. When a valid break fires, the indicator looks back up to 10 bars to find the last opposing candle, which defines the order block zone. The top and bottom of that candle set the zone boundaries, and a point of control line is drawn at the midpoint. Each zone receives a quality score between 0 and 100. The score combines the absolute Z-score value scaled by a factor of 20 with the volume percentile rank of the break bar measured over a 100-bar lookback. Zones scoring above 80 are classified as high probability zones and rendered in a distinct teal color for bullish and red for bearish, making them immediately distinguishable on a crowded chart. Order blocks remain active until mitigated. On mitigation, the block either disappears or turns gray, depending on whether the display mode is set to present or historical. Historical mode shows where price has already been, and whether respected zones formed clusters at meaningful levels. Present mode keeps the chart clean for live decision-making. The overlap detection option suppresses new order blocks that fall within the price range of an existing unmitigated block, preventing redundant zones from stacking in the same area during trending conditions. The dashboard shows a reliability percentage from the ratio of mitigated blocks to total blocks formed, and a count of currently active high-probability zones. If the reliability figure is climbing, a high proportion of order blocks are getting tested, which validates the detection methodology on the current instrument and time frame. The most direct strategy application is using high probability zones as entry areas on pullbacks, following a confirmed structure break. A bullish break with a high-scoring order block left behind gives a defined zone to watch for re-entry, with the point of control as a precision reference for positioning. The Momentum Z-score filter applied to structure breaks is a genuinely useful addition that separates this from purely mechanical order block tools. The quality scoring system gives traders an objective basis for prioritizing zones rather than treating all blocks equally. The dashboard feels underdeveloped relative to the depth of the underlying logic, and the session and overlap features feel supplementary rather than integrated into the core concept. Trendlines. Created by Ebesi Halil, this indicator automates trendline detection through systematic pivot analysis. The system scans historical price action for pivot highs and lows using adjustable strength parameters ranging from 5 to 15, then identifies support and resistance lines by connecting pivots that align within a fixed ATR-based tolerance zone. The core algorithm searches for trend lines where at least 3 pivots, adjustable from 2 to 8, fall within 0.5 times ATR of a projected line, creating what the author calls zones rather than single lines. The logic includes a proximity-based filtering system that displays only the single nearest support and resistance zone to current price, preventing chart clutter while maintaining focus on immediately relevant levels. Breakout detection triggers alerts when price closes beyond zone boundaries after previously trading within them, while touch alerts activate when price wicks into the zone without breaking through. Customization includes adjustable look-back periods with a default of 300 bars, pivot source selection between high or low or close prices, minimum pivot confirmation requirements, and separate color controls for resistance and support with transparency settings. This solves a real problem since manually drawing trend lines is both time-consuming and subjective. The zone-based approach makes sense because support and resistance actually function as areas rather than precise price levels. However, those fixed ATR parameters become a limitation when switching between different instruments or adapting to changing market conditions. Breakout targets. Created by Algo Alpha, this indicator identifies price consolidation ranges through volatility analysis, then projects risk-reward targets when breakouts occur. Upon detecting consolidation, the algorithm identifies the most recent pivot high or low using a swing length parameter defaulting to 99, divided by 2 for lookback. It then determines whether the high or low pivot is more recent, using that as the range starting point. This creates dynamic ranges that adapt to actual market structure rather than fixed periods. The overlap prevention system checks whether proposed ranges intersect with existing active ranges before creation. Ranges extend forward each bar until price closes beyond their boundaries. Breakouts trigger when close exceeds the top for bullish or falls below the bottom for bearish, immediately removing the range and initiating target calculations. Target placement uses ATR-based stop-loss positioning, defaulting to 5 times ATR from entry as the risk reference. Take profit levels, multiply this risk distance by user-defined ratios. Lines and labels display entry price, stop loss, and all 3 targets with extending tracking until TP3 is reached. The system maintains all graphics until TP3 hits or a new breakout occurs. Customization includes range detection period, overlap prevention toggle, ATR period for volatility measurement, stop loss multiplier, and 3 independent TP multipliers. Color controls adjust bullish and bearish scheme elements. The volatility-based detection gives objective consolidation identification, which beats manually drawing boxes around ranges. The pivot-anchored construction adapts smartly to actual market structure. However, those fixed target ratios assume every breakout has the same potential regardless of range size or market conditions, which limits real-world adaptability. Pivot levels. Created by Big Beluga, this Pine script indicator plots multiple time-frame pivot highs and lows as horizontal lines with dynamic color coding based on price position relative to ATR-adjusted zones. The core mechanism calculates pivot highs and lows across 4 user-defined look-back periods, defaulting to 5, 25, 50, and 100 bars. The value when function stores exact price and bar index when each pivot forms, maintaining historical level tracking. The ATR-based color system determines line appearance by measuring current price distance from each level. When price sits more than 1.5 times ATR above a level, the line renders support green. More than 1.5 times ATR below displays resistance orange. Price within the ATR buffer triggers active blue coloring, signaling proximity. Line thickness scales with pivot period, making longer-term structural levels visually heavier. Real trading application centers on confluence identification, where multiple pivot periods align. A trader might notice 25 bar and 100 bar pivot lows converging within a few ticks while displaying active blue, suggesting strong support confluence with current price proximity. The color transitions from orange to blue to green provide entry timing signals as price approaches, tests, and potentially breaks through levels. Strategy development could use ATR buffer zones as no-trade areas, avoiding entries when price hovers in blue transition zone between clear support and resistance rolls. The multi-time frame structure enables filtering, only taking long trades at 50 or 100 period pivots, rather than scalping every 5-period swing. It executes multi-time frame pivot tracking with thoughtful ATR-based color coding that adds genuine decision-making value beyond static lines. The dual-line rendering creates professional visual hierarchy, while structured-type implementation demonstrates clean code organization. However, the core concept remains standard pivot identification with aesthetic enhancement. The ATR coloring adds utility, but doesn't fundamentally change how traders would use these levels. Order block footprints. Created by Algo Alpha, this Pine script indicator combines order block detection with volume footprint analysis to reveal institutional trading activity at key price levels. The detection mechanism tracks cumulative impulse distance for bullish and bearish candles, applying z-score calculation across configurable window to identify statistically significant moves. The footprint visualization breaks each order block candle into vertical price rows, distributing lower timeframe prints across these levels based on close price location. Delta values at each row are color-coded from bearish red to bullish green, creating a heat map showing where buying or selling pressure concentrated. TPO counts appear alongside gradient bars to indicate trade activity density. Absorption detection becomes the practical edge. When price revisits a bearish order block and the upper wick contains positive delta prints, the indicator flags potential absorption, institutional buyers stepping in against expected resistance. Conversely, negative delta in lower wick of bullish order block retests signals selling absorption. The percentage labels quantify absorption strength relative to total bar activity. The volume ratio bars split each order block horizontally to show up volume versus down volume proportion. Real trading centers on waiting for price to return to these zones and watching for absorption signatures. A trader might short into a bearish order block. The footprint rows reveal precise entry levels where most aggressive prints occurred. It merges order block theory with granular volume analysis, providing actionable absorption signals beyond basic zone marking. The footprint implementation adds genuine insight into order flow at institutional levels, though visual density and processing requirements limit accessibility compared to simpler order block indicators. The z-score filtering removes much subjectivity from zone identification, while absorption detection gives traders concrete rejection signals rather than relying solely on price action interpretation. From session to trend trading, from fakeouts to ORB setups. Every position pre-calculated and back-tested, no second guessing. Available as separate tools or as the complete Pro Suite. More info on our website, link in description. Order blocks Volume Delta 3D. Created by FluxChart, this indicator combines order block detection with volume delta analysis and 3D visualization. The system identifies order blocks through a point of control methodology that scans for break of structure events, then anchors zones at candles where price touched the most frequently tested level during the preceding range. The break of structure logic triggers when price closes beyond recent swing highs or lows with adjustable strength of 5. Volume delta measurement operates on either chart timeframe or lower timeframe data through security calls. For each identified order block, the system aggregates total volume, bull volume from close greater than open candles, and bear volume from close less than open candles that occurred at the point of control level during the formation range. These values convert to percentages displaying the bull-bear split within each zone. The 3D visualization constructs polyline depth faces using ATR scaled offset coordinates, creating a perspective effect where zones appear to have front faces and top surfaces. Users choose between horizontal display with bull-bear split, shown top and bottom, or vertical display, with split shown left and right across the zone. The depth parameter controls how pronounced the 3D effect appears. Order blocks remain active until invalidation occurs via wick penetration or close beyond the zone, which is user selectable. The retest detection requires a very specific condition. The candle must open and close outside the zone while wicking into it. This ensures the retest happened during a continuation move rather than consolidation within the zone. Customization includes swing length, invalidation method selection, number of nearest zones to display ranging from 1 to 20, zone extension in candles, and comprehensive volume delta controls, including time frame selection and display style preferences. The point of control-based methodology actually advances beyond basic order block indicators by identifying the specific price level where institutions likely place their orders. The volume delta integration adds real evidence of buying and selling pressure rather than just guessing at order flow. The 3D visualization looks impressive, but doesn't add much analytical value beyond aesthetics. In our previous video, we reviewed and ranked top 5 TradingView scalping indicators everyone is using right now. Watch it here.